Now it's time to welcome our next guest, David Wright of Wright Financial Group in Toledo, Ohio. He has 30 years of experience in the financial services business. He and his team work closely with clients to design custom-built financial strategies and specialize in retirement planning. Dave, welcome back to the show.
Thanks for having me back, Dave.
You know, not only are you a good friend of the income generation, but you're also a good friend of mine, so it's always a pleasure to have you here. So what do you think has changed in the sentiment? You know, at the beginning of the year, it seemed, you just heard John Nigerian talk about some of the more technical things, but at the beginning of the year, it seems like everyone, would shrug off any kind of bad news and focus on the good news, and the market kept going up. Now, all of a sudden, it's like somebody flipped the switch and they're focusing on the bad news and ignoring the good news. What's going on out there? What are you hearing from people that you talk to every single day in your conference room?
Well, every day in the conference room, I'm seeing more and more skepticism. We do a lot of public workshops and folks that we talk to on a daily basis. There was this thing that happened in the 2008 frame when markets were dropping and folks weren't opening their statements. We're starting to see that happen all over again. People are starting to see red ink in their quarterly statements. And we deal with people here in Toledo that are, approaching 5 to 10 years before retirement, and that gets a little disconcerting to them.
And think about it. Markets are only down 10%, maybe a tiny, tiny bit less. What happens when they're down 20 or 30%? Are you able to at least share some stories from 2008 with them to maybe motivate them to do something so they don't have to deal with the 30 or 40% loss like they did a decade ago?
It's really funny, Dave, because a lot of times I'll talk to someone that comes in from the radio show or from a workshop that I do, and I'll even ask the question, and it'd be like an epiphany to them. They'll all of a sudden say, you know what, you're right. I had a 6-digit loss back in 2008. That wasn't a very good time. And then I remind them that they were 10 years out before retirement and that now they're on top of retirement. A drop like that could devastate all of their goals. And when you do a top-down analysis, look at what their needs are, and you realize that most people that we talk to have a gap between their retirement plans and their Social Security.
And David, we need to leave it there in this segment for just a minute. We'll talk about that gap when we come back. Stay with us. We'll be back with more on the income generation. Welcome back to the Income Generation. I'm David Scranton. I'm here with David Wright from Toledo, Ohio. Now, David, of course, our producer was forcing me. He's in my ear saying we need to go for a commercial break. I guess that's the advantage of me being from the East Coast. I'm not afraid to cut you off the kneecaps. You Midwesterners are too nice. You'd never do that. But you were talking about a gap after doing a top-down analysis. Continue with that thought, the gap that you're referring to.
Well, a lot of people, when we look at their statements, we realize that the income that they're generating from their current investments is nil. They're invested totally for growth. And watched your show before, I know that the equation for investing is TR, total return, equals growth plus income. And a lot of people don't realize that income is an important component of retirement investing. So if we do the analysis and realize that they got to cross their fingers and toes, hoping that the market continues to rise just so they can meet their future gap in their retirement plans, that's scary to them. And they don't know that there's a better way to invest for retirement. And
those are great words of wisdom. Whether the market's volatile and maybe trending more downward, as it's been for the last couple of months instead of upward, or whether it's trending upward like it was earlier in the year, but in terms of the sentiment, now it seems like more people would be happy to invest for the I, the income, instead of the G, the growth. Maybe not even if they don't even need the extra income. Let's say they have a big pension, big Social Security, they might be more willing to invest for the income just because it's a more conservative way and it might protect them from potential market losses should this thing really get ugly. Your thoughts about that?
Well, that's true. That's true. I mean, again, it's a function of what do you need your money for. Sometimes I find folks that have plenty of money. They've got a private pension far and few between, but some do. Some have their Social Security, but have their debts paid. But most people, when you ask them the question, everybody wants to have maximum return for minimum risk, but maximum return for what? So most of the time people gravitate towards, you know what, I'd like to have some income down the road to fill in the time traveling to my grandchildren. And they understand that working all of these years to grow a big balance and suddenly now needing that balance to be a functional income stream, it's a totally different skill set that I'm finding that people just aren't learning out there.
So,
and that's what our goal here is to help them with.
So to wrap it up, 30 seconds or less, what are the best words of wisdom you can give to our income generation viewers?
When it comes to investing, this is the key. Invest for the I and not for the G.
I love that. I love that. Where did you actually make that up? I love it.
No, I actually didn't. Some other man of wisdom I heard it from, but it's really true. People
Well, guess
need
what?
to invest.
Since it's not yours, now I'm going to steal it, because it's not really stealing if I don't know who I'm stealing it from. David, thank you so much. It's always a pleasure. We'll be right back with more on the income generation. I'm David Scranton.